This is big. Moon Platoon, what's going on? Today, I'm going to give you guys not only the technical analysis that you guys need for the day, but also give you guys a sense of what the SEC is planning with the meme stock response happening this week. This video came out on the 3rd, which means this is the week that we are going to see Gary Gensler step up to the plate. We see AMC hitting the VWAP here and heading down after a little bit of a bounce right here. Brand new support at $14.68. GameStop over here facing a support right here. We've already noted that before. We've been tracking these two stocks for a long time, and I want you guys to know that if you guys slap that like right down below, if you guys make sure you watch to the end, we're going to be able to get everyone notified, all of the retail investors, all of the apes out there, about this week's events. I'm so excited to talk about this with you guys, and I hope you guys are going to strap in for a good time. First things first, if you guys paid attention to the options chain on 2nd of February, 2022, we saw $2 million of in-the-money calls at $10 strike. All right, so suspicious already to say the least, because that is the day. Let's go back to the 2nd where we saw AMC slide right around from $17 down to the new support, down $14.60. However, then we saw brand new in the money puts, and that's the more interesting part. It's the part that I'm going to have to bring you guys back to in a second, because when we are paying attention to the short interest, which is still all the way up above 20%, it's 110 million on that 500 million float. It is looking as if someone is loading rockets for this week. When we take a look at the puts for AMC, we have already been faced with a dilemma, right? All of these in-the-money calls are not helping the stock move. There's no gamma ramp in either direction when those are already hedged. These are way hedged because they're all the way in the money. However, if you guys take a look at in-the-money puts, we see $1 million at $145 and $1 million at $18. There's a big gap in these two, but still, that's $2 million of in the money. One far more in the money than the other. This is not a glitch. This is straight up manipulation of the most absurd kind. And I want to be able to point it out to you guys if you guys are watching the options chain. Before we get back to the technical analysis that we did hint at the beginning, let's take a look at what Mr. Gary Gensler is going to announce this week. Make sure that you guys are paying attention to how he's acting, because I want to use emphasis on the word acting.
But there are quite a few things that we haven't seen yet. Let's start with crypto, because everyone loves to talk about crypto. You said you think a lot of these tokens really are securities. Are you seeing evidence actually there are things being done in this market that would be violations of the securities laws if the securities laws apply?
It's fun because AMC and crypto seem to have run in the past inversely. Because you might have noticed the crypto run today on SHIB, Doge, and even Bitcoin has seen a nice half of a double-digit run today. The SHIB and Dogecoin both nearly up 10% at the end of the trading day. SHIB was running far more than that in the beginning of the day. Of course, you are going to have a pullback after a run like that. Let's see what Gary Gensler has to say about the crypto.
David, I thank you for inviting me here, and you're right, we do have a broad agenda, and crypto is part of that agenda, but it's an agenda really to make the capital markets work better for the investing public and for the companies on the other side, to drive more efficiency in these markets. As to your question about crypto, the agency is really just looking out for investors, and many of these tokens, not trying to prejudge anyone, but many of these tokens have the attributes of securities. They're raising money from the public, and the public is anticipating profits based upon the efforts of others. And so we've brought a number of actions. We're trying to work with the various crypto platforms, the exchanges, the lending platforms to come in, get registered, find where we can to adjust our rule set to get the investor protection for the public.
Okay, you heard protection. You heard that he's saying crypto has a lot of the same stuff that makes regular securities function. So that is likely explaining a lot of the bullish activity on the crypto market, because again, he is inside the entire network of the financial world here. So giving it credence, giving it a little bit of credit is something that, as the securities, as the SEC head, he's someone that needs to do it. However, is that going to be something that leads into his conversation of the meme stock response? Let's take a look.
As you say, you've encouraged the exchanges to come in and get registered. At the same time, a lot of them have not, as far as I can tell.
Yeah,
At what point do you have to force it?
Well, no, it's because, look, if you're a platform and you have 75 or 100 or sometimes 5,000 tokens on that platform, probabilities are that a number of them, and maybe many of them, are what's called a security. And it's Congress painted with a broad brush. And it comes down to this: are you raising money from the public, and the public's anticipating profits based on the efforts of others? My predecessor, Chair Clayton, the agency that I'm honored to chair at this point in time, is going to try to pursue investor protection. And if that means bringing greater enforcement actions, we'll do that. But it would be better to have these platforms come in, work with us, and come under the securities laws.
Do you think you've done everything you can under the statutes as they exist now? Do you need legislation in order to really go after and really get registration from those exchanges?
I think that the laws are pretty clear as laid out in the 1930s, and we have an ability to work with these exchanges using various authorities to basically tailor some of these, because these crypto exchanges and lending platforms have operated differently than the traditional New York Stock Exchange. But would it be helpful to work with Congress on some things? I've said this in the past around some details around transfer agents and others. Yes, but unless Congress says otherwise, we have to ensure there's investor protection in this space. And we're going to work with the Commodity Futures Trading Commission, where there's some that are commodity tokens, because while many of these are securities, some may be under their remit, and we work together as two federal agencies.
Let me turn, Gary, if I could, to a second item on the agenda.
Here it comes.
In no particular order here, and that is payment for order flow, something that you've come out against. Last August, you said you were considering actually banning it altogether. Where does that regulation stand? And at this point, do you still think that's possible to ban it altogether, or is it more likely we'll have full disclosure?
PFOF. So the most important thing about you have to remember is that was the whole reason why Robinhood started getting the lit fire underneath its entire business practice. So as a understanding, you are sending that information directly to a person who's paying for that data milliseconds, important milliseconds before your trade even occurs. So that's just giving someone else across the street how much you're willing to sell your house for, looking as if they get the second move immediately after your move, sometimes before.
Again, what we're trying to do within our remit is help investors get a better deal on one side and companies raising money on the other side a better deal, and drive greater transparency and efficiency in the middle of the market. So in the equity markets right now, if you place a market order, a retail market order, 95% do not go to the lit exchanges, do not go to NASDAQ or New York Stock Exchange. They go to wholesalers, and they don't have order by order competition. And part of that is because of what you just said, payment for order flow, which is, yes, it's banned in the UK and in Canada and Australia. The European Union, through something called ESMA, is looking at that right now. And so I think it's natural that we look to say, how do we drive greater competition and efficiency of this market? And use the tools that Congress have given us.
But are you keeping open the possibility, the option at least, of banning it altogether? And if so, when will you make a decision whether you'll do that or not?
Well, it would be a decision for the 5-member commission. We would put it out to notice and comment, so the public gets to weigh in. We benefit from the public's view, from the investor side, the issuer side, to basically a lot of our market right now is dark. It's not in the lit markets, David. It's dark and going to wholesalers, and how we get more transparency and competition in the market. So each feature is on the table, whether it's something called the minimum increment or tick size, or the national best bid, best offer, and how the order routing works. And yes, that includes not just payment for order flow, but possibly what's called exchange rebates. So it all fits together, and we haven't served up a recommendation to the commission yet.
It really all does fit together. Remember, dark pools, we talked about this in the past. I know you guys are waiting for the AMC connection and the GME connection. In a second, I just forwarded into the video. It's right here in about a minute. I'm gonna skip right to it, give you guys an extra minute back because he did say it's up to you. So comment down below, what do you guys think about payment for order flow? PFOF, is it going away this year? Is it going away in this decade? When is it going to be something that even remotely works on behalf of the retail investor?
Action, does that suggest that maybe there wasn't any wrongdoing?
Well, again, for the public, in the job I'm in, I'm also a chair of a commission and sometimes has to vote on these various enforcement actions. So I can't get into any one matter or prejudge anything. But there was 4 matters of policy, not enforcement, but policy that we noted, and the staff did a staff report. And one of them we're going to take up next week, actually, an open commission meeting, is about the plumbing of the stock market, what's called clearing and settling, and how we can take some risk out of the system. And also last year, the retail public found that they were foreclosed from trading, that a number of brokerage apps said, nope, it was a fateful Friday, and they said you couldn't buy any more of this stock or that stock. So we're trying to address the plumbing and put a proposal out next week. We'll also, I think, hopefully be taking up what's called digital engagement practices, what some people call gamification, and what to do there. And as you've and I've been talking about, the actual market structure itself. So there's 3 or 4 projects that we have here, and next week we're going to put our first proposal, hopefully, in front of the public, subject to my commission's approvals.
A third item on the agenda you laid out has to do with climate and disclosure with respect to climate. My understanding is, with Bloomberg reporting on this, that now we are having the SEC ask for more detail, for at least from subsidiaries, on registration statements. But what about the move to possibly requiring disclosure in 10Ks? Where does that stand?
So if you guys are interested in climate, you guys saw the title of this video right here. SEC's meme stock response coming next week, Gensler says. So if we can see a bullish response from Gensler about the manipulation that happened during the entire saga, we could see, now it's back to the technical, AMC faced the bounce once again. It attempted to bounce as early as the 3rd of February, about 2 trading days ago. It got as far in the after hours as 1539 before having to bounce again. Now, if bullish investors might see a intra-week double bottom here, but unfortunately right now that was fizzled as it crossed over the 200 EMA, this purple line here. Now AMC does not have a double bottom forming, but it does have the opportunity to bounce again off of 1469 and then off of 1410. That's a level of support that we saw a few weeks ago. Now the thing about GameStop is that it is currently hovering at that $100 mental barrier, and that means that we are going to have to wait for AMC and GME to be able to take off from those respective supports. So if you guys are interested in what Gary Gensler has to say, keep your eyes peeled and know that I'm reporting in as soon as information comes in about that. Thank you guys so much for watching this show. Thank you guys for being the supporters of this show and that sleepy meatball right there in the corner on either Patreon or by clicking the join button next to the subscribe button right here. If this video was interesting to you, please hit that like. If it was entertaining for you, please hit that like. Note that it was not financial advice, and I am excited to see you guys in the next video. Check the links in the down below, especially if you are interested in the short interest or in the options flow. That is Ortex and Option Sonar respectively. And of course, you guys still get that 20% off of Lux Algorithm as well as 30% off of Chatter Quant, 2 very important tools for trading for both beginners and veterans. And finally, if you guys have not checked out crypto.com, it's your opportunity to write down in the description because it is the crypto craze. It's insane. Thank you guys, and we'll see you guys in the money. Peace.